Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be taking a pair, breaking it down from a technical and order flow perspective to try to understand where we have the highest probabilities of the next potential move. And in doing so, I will provide as much free education as possible. So I really suggest that you stick to the video to the end, and I will see you on the charts. In today's video, I want to speak about USDCAD because at the moment we do have quite interesting price action and structure. So first, I will cover the technicals, then we go and see what we have from an order flow perspective. Now, starting here from the monthly time frame, what do we have? Is a market which has just created a very strong impulse to the upside, followed by this correction. Now, in general, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. And if we do that, we can notice how the market at the moment has just entered the zone, which is in between the 50% and 61.8 Fibonacci's taken on the monthly impulse. Now, the 0.618 specifically is the golden ratio, so the Fibonacci level to which most of the times the market will create a correction to before then rejecting it to the upside. So from a monthly perspective, we are approaching very strong support and there is a good probability to see a potential rejection higher. Now, if we drop down on the weekly time frame, what do we have? Now, here on the weekly, we can see in an even more clear way how this area is actually an important structured zone. In fact, from here, this rejection to the downside was created before all this move to the upside was then printed. And we can also notice how this area was already acting as resistance here. So what we actually have from a weekly perspective is a strong area of previous weekly resistance, which the market has now broke to the upside and is currently retesting it as support. So we have previous weekly resistance turns support, which the market is about to test. And from here, there is a good probability to see a potential rejection higher. We can also notice how we do have the creation of this M pattern. And in general, after the creation of an M pattern, what you would expect is for the market to create a rejection higher to go and complete the pattern itself at the previous support turn resistance, which in this case would be at this area. So here in the weekly, we could expect a test of this zone and then a rejection higher with an upside target at this previous support turn resistance, which in order to keep the charts cleaner, we can identify with a horizontal ray that we can then make visible also on lower time frames. So we know that this is the potential reversal zone and this is the potential upside target for the completion of the weekly pattern. Dropping down on the daily time frame, what do we have? Now, from a daily perspective, what we can see is that the market has just created a strong impulse to the downside. Usually, a market never moves in a straight line. It will create a series of impulses and corrections, which are the definition of a downtrend itself, because when you have a downtrend, you have a series of lower lows and lower highs. So in this specific case, we can see how the last move was a lower low. We don't have the creation of a lower high yet, meaning that this increases the probabilities that the market will need to create a correction. And in this case, since we know that on the weekly, we have an upside target around this zone, the correction could be all the way up to that completion zone of the weekly M pattern, also rejecting the support that we have all across this area. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data for the CAD, what we can see is that with the last reports on the CAD, net positions have been decreased. We went from a positive 26k net positions with way more longs than shorts from an institutional perspective on the CAD, going from a 51k longs and 24k shorts all the way down to now having the opposite, so more shorts than longs with a negative net positioning and 56k shorts and 38k longs. So the CAD is starting to get weaker, and a weak CAD is exactly what we need if we are to create a rejection higher. Because always remember that all currencies on the spot are traded against the USD. So if you're checking the data for the CAD, you're actually checking CAD USD. But since we want information on USD CAD, we simply have to reverse everything that we are reading here. What this means is that If the market here will continue to test this area, there is good probability for a potential rejection higher. Now, by the way, I made a full breakdown of USD-CAD when the market was around this area, and I explained all the reasons for which we could expect this rejection to the downside, and also this impulse correction and impulse pattern to the downside to be created. And by the way, I will link in the description that previous analysis so you can go and check it out for more free education, because now that the market has created a move, it was definitely time to make an update. So what it would appear here from the analysis that we have already performed is that there is good probability to see a potential reversal from this area. So how we could be approaching this move? Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to a bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection higher for the market to complete the weekly M pattern. Now, if you don't know what I'm speaking about when I say valid entries and this kind of things, that is all part of the mentorship program, which you can find at transparentfxtrading.com. Here you have the possibility to gain access to my entire course with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is the one that we used in this analysis, the trading station software, which puts together everything you need as a trader all in one interface. And if you scroll lower past the testimonials, you will see that at the moment I'm running a special promotion in which you have a huge discount on the mentorship program price, so one-time payment for lifetime access with a massive discount. And as you can see here, there is still time to join before the timer goes to 0 and the price goes back to normal. However, spots are limited, so if they get filled before the timer goes to 0, the offer will end anyway and price will go back to normal. So I really suggest that you join directly from here and gain automatically access with the email and password that you will create during the checkout. So definitely looking forward to have you on board. If you enjoyed the video, make sure that you smash that like button and comment below. It really does help with the YouTube algorithm, and I will see you in my next video.